morning and welcome to this Money Control live stream, a brand new edition of Opening Bell. Of course, the cues are looking fairly positive this morning. I am Nandita Khemka, and over the next 1 hour, I beg your pardon, I will be taking you through all the market cues, the market action, and of course, some Diwali picks to watch out for. Lots of stocks in focus. We'll be focusing in on those as well, and all your stock-related queries will also be taken up. So keep them coming in. On our live feed, we'll try and take them up. But all in all, the cues are fairly strong this morning. The GIFT Nifty, in fact, was above that 25,400 mark. Yesterday, after a 2-day slump, we saw very good traction coming in. In fact, the Nifty took out that recent swing high of 25,331 or thereabouts, and we closed around that level as well. Whether or not we managed to clock that 25,400 mark and subsequently 25,500 as we head into the Muhurat session, that will be the crucial thing to watch out for. But for now, nothing to complain. Festivities are back on the Lal Street and the bulls seem to be in party mode as of now. In terms of earnings, quite a few of them. Yesterday, banking earnings kicked off with Axis Bank. We'll take stock of the numbers. Steady set, one-time drag on profit, but nevertheless not bad. The numbers coming in from Axis, and of course the big number in terms of IT earnings, Infosys, that will be reporting earnings today. We'll be watching out for that. Quite a few consumption names like Nestlé and Eternal will also be handing in their report cards for the quarter gone by. So that will give us a sense of how consumption panned out as well. But of course, before we head any further, let's take a quick look at the top stories at this hour. Wall Street ends higher amid volatility. S&P 500 and Nasdaq break back into the green territory after strong earnings from Bank of America and Morgan Stanley. Dow Jones ends near the flat line as concerns over China trade negotiations and US government shutdown weigh in. Asian markets trade with gains, tracking US market cues. The GIFT Nifty indicates a positive open for the Indian market. Crude oil slips to a 5-month low on US-China trade tensions and International Energy Agency's prediction of a supply surplus next year. Gold, on the other hand, breaches the $4,200 per ounce mark as rate cut bets rise. And on the earnings front, Axis Bank reports a steady September quarter with strong loan book and net interest income beat, while profit takes a one-time provision hit. Meanwhile, IT majors Infosys and Wipro are set to report their second quarter numbers today, along with Eternal, Nestlé and Jio Financial. Well, a quick look at what really transpired yesterday. We crossed that recent high of 25,331 as I was mentioning at the start. The Nifty in fact is perched at a 1-month high, and we had broad-based gains coming in yesterday. In fact, the Nifty Bank Index ended above the 56,800 mark, and particularly from the financials pack, the NBFCs were doing particularly well. We saw big gains in the likes of Bajaj Finance, that was up somewhere around 4%. Even Chola Investment, for that matter, rose anywhere between 3 to 4%. FMCG saw a return in buying interest. We have Nestlé numbers today, so watch out for that index as well. IT will be in focus. Infosys, Wipro, LTI, Mindtree, all these companies will be reporting numbers. But how can you not talk about Realty? That was the top performing pocket yesterday. That index was up over 3%. A lot of stocks were reacting, on the upside. When it comes to the real estate space as well. Lots of other stocks were also in focus on the mid-cap arena. But if you look at the futures and options cues, the put-call ratio climbed to 1.21 vis-a-vis 0.9 in the previous session. A couple of stocks in the F&O ban. In fact, one stock, Samman Capital, remains in F&O ban. But RBL Bank, now there is news flow around this counter as well. The stock is out of the F&O ban as well. The stock will be in focus. We'll tell you why later on in the show. In terms of fund flows, foreign investors, the sell-off has been abating over the last few sessions. We did see them turning buyers last week as well, and no big buying figure, but still 68 crore rupee worth of stocks bought in the cash market when it comes to foreign investors. DI buying support continues. 4,600 crore rupee worth of equities bought in the cash market. Two new listings today, Rubicon Research and Canara Robeco. So keep an eye out for that. 10 a.m. is when they list on the bourses. But there's another positive cue that I haven't mentioned, and that's the fact that Trump in a press conference has said that PM Modi has told him that India, will stop buying Russian oil. So, we need to watch out for, the developments on this front, because this was one of the biggest bone of contention between India and US. And, with these kind of statements coming in from Trump, looks like we are closer to a trade deal with the US. So, yes, this comment and of course, this entire thing will be in focus today as well. But on that note, let me bring on board our guest for today. Joining me is Ajit Mishra, Senior VP, Relegate Broking. Lovely chatting with you, Ajit. Looks like the festivities are back on Dalal Street. Bulls are back in the festive mode. We are around about the 25,350 mark. What is the possibility that we could, head into the Muhurat session with 25,500 on the chart, which also happens to be the swing high of September? What are your thoughts?
Yeah, good morning, Nanta. And first of all, festive greetings to you, entire team, and all the viewers. And as you have rightly mentioned, that finally, like after almost 1 year of gestation, finally we are seeing some sustained traction. Though we are still not completely out and out seeing a positive momentum in the market, but yes, the key sectors, banking and IT, they have stabilized. Now we are seeing that private banking majors, which were sitting on the sidelines, they have started participating. IT majors, before the numbers, they have started seeing some traction, and the other sector anyways they were doing well, be it auto metals, PSU banks, some of these defense names and all. Broader markets, we are seeing overall strong picture. So we believe that finally again we are going to attempt this trend line hurdle at 25,450 maybe in a day or two. The moment we cross this hurdle, then probably this June-July high close to around 25,670, 680 is something that the market is going to attempt, and maybe inch higher towards the record highs as well. So as of now, the tone looks positive, and one should continue with buy on dips approach until we decisively break the 20 EMA mark, which is close to around 25,050 area. Banking is leading from the front, so we expect gradually but steadily that it might inch towards record highs as well. So 57,700 is what we are eyeing positionally. So with the immediate support at 56,500, 56,000 zone, where one can look to accumulate in case if there will be any dip.
That's true. Bank Nifty, of course, also could retest record levels. But I was just looking at the rates in the pre-open. We are closer to that 25,400 mark in the pre-open at least, and you can see Axis Bank. Top Nifty gainer, of course, this is just the pre-open session, but still it's showing gains of 4%. Numbers came out yesterday. I want to quickly take you through what they really look like. Profit was down 27%. Of course, that has missed expectations, but that was largely on account of a one-time hit or one-time drag, a one-time provision that the company has made. So because of that, we saw profit dipping so much, 27%. Net interest income rose 2%. That's slightly above estimates as well. But the good thing is that the asset quality has improved on a quarter-on-quarter basis. Slippages as well on a quarter-on-quarter basis has come down quite meaningfully. They've made an additional one-time standard asset provision of 1231 crore rupee during the quarter for 2 discounted crop loan variants. And even though I was going through some of these brokerage notes, the mood is fairly bullish on Axis. In fact, Bernstein has an outperform call, and the target price is at 1250 or thereabouts. And they've said that lower slippages and rising card additions indicate that the stress may be bottoming out for Axis Bank. The stock is somewhere around 1216 or thereabouts, going by what the pre-open rates are throwing up. But, Axis Bank, what would be the nearest level to watch out for here on the upside now?
So Axis, in fact, Axis and Kotak both were doing well, while HDFC and ICICI were sitting on the sidelines. So means from 1040 levels to 1220 means closer to the previous swing high, something that the stock has already tested. We were seeing a bit of a profit taking ahead of the numbers, and we are still holding above the short-term averages. So this gives us comfort. And as you've rightly mentioned, that in the pre-open, it's indicating roughly around 4% kind of an uptick. So the moment we cross 1240, then probably 1280 or maybe gradually towards the record high 1350 area is something that the bank might attempt. So as of now, one should definitely stay put. The immediate support is at 1150, and the major support exists around 1120 mark. So with that as a stop loss, one can continue to hold the longs. They can in fact look for fresh long positions the moment we cross 1220 mark.
Okay, that's the view on an Axis Bank. But let's also talk about RBL Bank. Of course, the stock has been in news, but yesterday it was a money control exclusive, and we reported that the bank will be considering a fundraise proposal on the 18th of October. And the announcement comes in the backdrop of ongoing advanced negotiations with Middle East banking powerhouse Emirates NBD to potentially cede a controlling stake. On the 30th of October, we had, in fact, we were the first to report that Emirates NBD had entered final leg of discussions to acquire a majority stake in the lender, and of course, in a mega proposed transactions, which could in fact also open it, like trigger an open offer. Uh, the money control report had mentioned that the route of preferential issue of shares is likely to be used for the deal, which would be subject to RBI approval as well. And if this deal or transaction goes through, it would be one of the biggest banking sector M&As in India Inc. Of course, it also underscores the rising interest of overseas financial services majors in Indian assets. But RBL Bank, the stock has spent a lot of time in the F&O ban in the last 3 to 4 months. And despite that, the stock has done well, steady performer it has been. Like 6 months, we've seen a 65% up move. Is it closer to hitting, the floor on the higher side or the ceiling, so to say, on the higher side? What are your thoughts, and do you see more upside?
Yes, Nanta, means the stock has had volatile swings in past. Means it was usually that every time you used to see tech sellers used to become active and they push the stock lower. This time around, we are seeing a different trend. Means on every dip, there is a buying interest emerging. It seems like a trend reversal after a long underperformance. And this time around, another important aspect is that we are crossing the year high, the calendar year high as well now. So this gives us comfort that yes, probably this momentum is here to stay. And with 275 as the immediate base, one can continue to hold the longs. One can look for, in fact, fresh long positions also. Gradually around 340, 360 is something that the stock might attempt. The risk reward is favorable. One can continue to look to accumulate the stock until we decisively break this 275 mark.
Okay, 340, 345, that's the level to watch out for on an RBL Bank. And of course, even now the risk reward ratio is looking favorable. But just about 2 minutes to go for the markets to open. Any recommendations, Ajit, for the next couple of days? I'll talk about the bonus
Yes.
trading picks later, but just for
Okay.
this week, any recommendations?
Yeah. So, apart from banking, the financial space is also buzzing, and Chola Finance, after this, recent consolidation, made a remarkable move, and we anticipate this positive momentum to further strengthen. And in the near future, 1820 is what we are eyeing as the immediate target. So, with stop at 1635, one can accumulate Chola at current levels. Then we have L&T, a steady performer from the capital goods space. Post this consolidation range breakout, the stock has been gradually inching higher, and we expect this stock to inch towards record highs in the near future. So 3690 should be a stop for the existing position. You can buy fresh also, and 4080 is what we are eyeing positionally.
Okay, Chola Finance and LNT, two recommendations coming in from Ajit. With that, just I think less than a minute to go for the markets to open, and we are seeing some bit of traction, in the pre-open at least, around that 25,394 mark. I think my rates are not really updating, but IT is one pocket that will be in focus because it will be reporting numbers, the likes of Infosys, Wipro and LTI Mindtree. So keep an eye out on that. Rest of the week as well will be very, very crucial in terms of earnings. We have Reliance Industries also reporting numbers tomorrow. Yes, we can see the first ticks coming in, and we are closer to that 25,400 mark, 25,396. That's where the Nifty is at the current juncture. Just look at the Nifty Bank Index. That's seeing quite a bit of a strength. We've crossed that 57,100 mark on the index, a solid 0.5% up move there. Just want to see what Axis Bank is really doing after a steady set of numbers. It's up 3%. Eternal also ahead of numbers. It's up 1%. Kotak Mahindra Bank, up almost 1%. HDFC Bank as well is back in the green, reports numbers of the weekend. That's higher by 0.5% or so. In terms of some of these auto names, they also in top gear. The likes of Bajaj Auto, Eicher Motors, M&M. Some of them feature on the top gainers list this morning on the Nifty. Max Healthcare is another one that's up 0.6%. Bharat Electronics, Power Grid, L&T as well. That was Ajit's recommendation. That's also up and about. Tata Motors, Jio Financial ahead of numbers is trading in the green. But what's not doing well are the likes of HDFC Life. It reported numbers yesterday post market hours. Reacting to that, down almost 4.5%. HDFC Life. Shriram Finance is also down today, over 1.5% cut. SBI Life. In fact, there's been a rub-off effect of the weakness in HDFC Life. SBI Life is also down 1%. Infosys, feeling the blues ahead of numbers. All the other IT names like TCS, Wipro also trading in the red, and some of these metal names like Tata Steel have also kind of cooled off slightly. SBI is also down, and so are some of the pharma names like Apollo Hospital and Sun Pharma. In terms of the advanced decline ratio, fairly strong at the current juncture. 5:2, that's the NSE advanced decline ratio. Early days to really call it a trend, but if you look at the broader end of the markets, they are in comparison to the benchmarks, they are fairly muted today. In fact, the Nifty Mid Cap Index is on the verge of giving up gains this morning. But looking at the open, HDFC Life, I want to get in your thoughts on that. Ajit, that's down over 4%. Numbers came out post market hours. How are you looking at the charts, and what would your positioning be here?
So, see, before, yesterday we were seeing a bit of a consolidation. It was an uptick yesterday, and today we are seeing that the pressure is emerging at higher end. Means we are testing the 200 EMA, the long-term averages today. So it's important for the short-term traders that 7:30 on the closing basis, at least the stock should hold. Otherwise, we may see some further profit taking, but overall the trend looks positive. So for those who are looking for investment opportunity, they can look to utilize this decline for the same. But short term, yes, it might consolidate in this range of around 720 to 760.
Okay, consolidation expected in the range of 720 to 760, but you can look at accumulating or buying on dips. That's about life insurance. But what about IT? What were you doing with IT stocks last week? Because they saw a good pop, but this week hasn't been all that great for IT. And today, of course, Infosys numbers come out, and Persistent came out earlier this week, and they were solid numbers. How would you be positioned in some of these frontline names like TCS, Infosys, vis-a-vis a Persistent and Coforge?
That's right. So in fact, Nanta, I feel that in case if we manage to sustain at current levels, because last week, if you remember, we were roughly around 5% up on the IT index. And with the beginning of the earnings season, we are seeing bit of a muted, start or muted session. But the tone looks positive, and like what you rightly mentioned, that yesterday it was Persistent from the mid cap IT name, wherein we were seeing traction. Large cap, they are trading bit of the cautious bias, because we have not seen a majority of the stock decisively crossing their immediate hurdle of short term averages. So for Infosys specifically, before the numbers, we are seeing very lackluster move within this very narrow range, close to around 1400 to 1550 is what the stock has been consolidating for almost a month. So it's important, the moment we cross, let's say 1500, 1550 decisively, then we can see some strong action towards, let's say 1650 to 1750 area. So as of now, consolidation is more likely in the IT pack, and there's no complaint, as long as the banking is doing all the lifting and IT stays stable.
Okay, that's the view on IT. We had a couple of queries on IT. Naveen wanted to know on Coforge versus Persistence. I think you have already, answered that query. But, let's talk about Eternal as well. Numbers are coming out today. The stock, of course, has been doing extremely well. In fact, the entire new age basket has been doing well. Around those new highs as well on Eternal. Just taking you through what the estimates are. The revenue is expected to jump 66%. Margins, however, are seen lower at 3.2% vis-a-vis 4.7%, and profit could slip somewhere around 21% or thereabouts. The gross order value for the food delivery business is expected to grow 18 to 19% on a year-on-year basis. For Blinkit, gross order value growth likely to be strong at 130 to 140% on a year-on-year basis. What are the levels you'll watch out for here? Poised to clock that 400 level anytime soon.
So yes, possibly yes, because the way we are seeing that on every dip closer to the first line of defense, that the 20 EMA mark, the stock witnesses strong traction. And in fact, this time around, the consolidation was slightly more on the positive side. Means we were seeing more of time-wise correction in last 3-4 trading session, and then followed by this up move, which is helping the stock to inch towards the record highs with every passing day. So, but yes, at the same time, since the stock looks slightly overbought to me, so there could be a bit of a profit taking at the higher end. So, from the trading point of view, 340.42 is something that should act as a strong support in case if there'll be any profit taking. But that should be a stop loss in case if you have any existing position and you're planning this trade to carry for the earnings as well. But overall tone looks positive, and gradually, yes, there's a possibility that the stock might inch toward 400 plus mark also.
Okay, that's the view on an eternal. But I want to talk about an MCX as well. This stock has been on a tear in the last 1 month. Today, of course, it is taking a bit of a breather. I have a query on this stock from Nana Prakasam, and I think he holds 50 shares, and his buy price is 8,745. He wants to know whether he should hold or book profits. Please suggest. He is sitting on good amount of profit, but should he wait or book partially here?
Right. So, Ananta, I guess he's playing a proxy play to what we are seeing in the bullion markets, means the gold, silver. We are seeing unprecedented rise, and that's reflecting in MCX price as well. So, after almost 3-4 months of consolidation, the stock has reclaimed the record highs, and the way we have witnessed a breakout with strong volumes, gradually we anticipate the stock to inch toward 10,400 mark. So he is already sitting in decent profit. Now his trailing stop loss should be at 9,000 mark, and he should keep on trailing the stop losses on every 3 to 4% kind of an up move. So hold as of now with 9,000 as a stop loss and 10,400, 500 as a positional target.
Okay, I'll just ask you your thoughts on gold in just a bit, but there is another stock that's been in news, and that's IEX. Of course, there's some news of insider trading here, and the stock has also been in a downtrend, so to say. Today it's trading with a mildly positive bend, but the stock has been in a downtrend, so to say. Last 6 months, it has shaved off almost 30%. How would you look at this particular stock, IEX, from the exchange pocket?
Yeah, so basically we all know that post this news of that the stock might not manage to continue with its monopoly, and since then we are seeing that this negative bias on every uptick we see that the seller emerges, especially around 140-45 mark. And in case if it fails to hold this recent swing low close to around 130 mark, probably we can retest the major support area around 120. So the overall texture looks negative. In case if you have any existing position, prudent approach is to maintain a strict stop at 130 and utilize any rebound towards 140-45 mark to exit your longs, and completely avoid in case if you're planning any fresh bet.
Completely avoid for any kind of fresh bet on an IEX. But moving on to some other queries then. There's a query that has come in from Aisha, and she wants to know your thoughts on an ITDC. She holds 76 shares at the rate of 757. Wants to know if she should average at these levels. Looking at the chart of an ITDC, today it's up somewhere around 4%, and the stock has seen some kind of traction in the last 5 sessions. It hasn't really gone anywhere. If you see the last month or so, it has been fairly sideways. 638 is where it's at, and her buy price is 757. She is, of course, in a bit of a loss here. Should she average, or what should she do?
Nanta, this stock usually see very negligible volumes, but off late in few up days we were seeing that the stock managed to post roughly around 10 times of the average volume. So we have had multiple occasions where the stock inched roughly around 8 to 10% in a single day. So I would recommend her to utilize any rebound to exit longs around this 720, 750 area, this buying price. Because overall, if you see that this stock is extremely volatile, and in case if you are not okay with 8%, 10% kind of a stop losses, the prudent approach to avoid such stocks. So as of now, 600, 610 is the area where we have the immediate base, and 720 with the stock recently tested as the immediate hurdle. First, it might take a breather around that area, and then probably around her buying price. So utilize any recovery. Don't add fresh or average down to your existing position, but you may continue to hold with 610 as a stop loss.
Okay, that's the call on ITDC. Hope that answers your query. Want to get in your thoughts on some of these real estate stocks. Even today, I think the real estate pack is leading from the front. Yesterday as well, it was among the top gainers. Today, we have Ubera Realty reacting to numbers. The stock is up almost 4%. Anything that you like within the real estate space?
So yes, Prestige and Phoenix is something that one can look at, because the way we were seeing that while the realty counters were witnessing profit taking, they continue to hold their major averages, long-term averages. And the moment we saw a rebound, they were among the top names which witnessed strong traction with volumes. So for Prestige, we believe that closer to around 1800, 1820 is something that the stock might test in the near future. So with stop at 1630, one can accumulate Prestige. And for Phoenix Mills, closer to around this current area 1660 is something that one can look for fresh long positions, and gradually around 1825 to 1850 is something that stock might test. So with stop at 1620, Phoenix Mills is also something that one can look to accumulate.
All right, Prestige and Phoenix looking attractive from the real estate basket. But since it's the festive season, I want to take up a query that has come in on the hotel space. This one's coming in from Geetu Sandesh. Wants to know ITC hotels or Indian hotels, which is a better buy? We had a couple of brokerages who had pointed out that Indian hotels is a good Samvat 2082 pick. Of course, it is a leader in its space, right, in the hotel space. But chartically, if one were to ask you, select between ITC and Indian hotels, which one would you pick?
So Indian Hotel, yes, it's among the top names within this space. But off late, we have started seeing bit of a profit taking or sideways trend. The stock is trading below the major averages, long-term averages, which is not a good sign. So for short term, let's say if the view is less than a month, I would rather prefer lemon tree, within this space wherein we are seeing steady traction on every day. For Indian Hotel, I would prefer that the stock sustains above 760 mark for a day or two. Then only one can look for fresh long position. ITC hotels, on the other hand, we are seeing gradual recovery after retesting the long-term averages. But we have a strong hurdle around 220, 225 mark. So risk reward is not favorable at current levels.
Okay, that's the view. And Lemon Tree, in fact, is looking, is poised much better when it compares to these two names on the charts. But there's another query that's come in from Anandru Bandyopadhyay on an Intellect Design. Wants to know where is the stock headed from here. The stock did see good traction in the last 6 months, but it lost its way. If you look at the last 2-3 weeks or so, we've seen the stock come off quite a bit. How would you look at this stock now? It's sub 1000. Which is the direction it could take here on?
Yeah, so it's more of time-wise correction. Yes, it's slightly volatile these days, but overall we are still maintaining about the long-term averages, which is a good sign. And since we have started seeing strong traction, especially in select mid-cap name post numbers, we may see the rub-off in Intellect also in days to come. So closer to around 1120, 1130 is something that the stock might attempt. So with 950 as a closing stop loss, one can continue to stay put.
Okay, stay put with 950 as the crucial level. Couple of more queries to go then, last few of them. There's one query on Scient Tech and OFSS from Debu K. What are your thoughts on these two charts?
So Scient, in fact, is gradually drifting lower. We are very close to the previous swing low. In fact, the 52 weeks low, close to around 1070. In case if it fails to hold this level, probably we are set for the next leg of down move. So 1070 strictly should be your stop loss dip, okay? And in case if we see any bounce, 1200, 1250 means on every 50 points kind of an uptake, there is a resistance. So utilize any recovery to reduce your position. And what was the other stock, Nanta?
OFSS, Oracle Finance.
Oracle Finance. So this stock was in news, of late when the parent company witnessed strong traction, and now we are seeing again this move has fizzled out. But it's more of again a consolidation, similar to what we were seeing in Intellect. So 9500, 8250 is broadly the range that it's currently hovering in. Of late, the stock has inching towards its long-term moving averages. So there's a possibility of further consolidation. So short-term bias looks sideways to us until we decisively reclaim 9500 mark. I doubt that we can see any strong momentum in days to come.
Okay, that's a view on Oracle Finance. The last query for the day then. This one's coming in from Pooja Khanna on Varun Beverages. She's been holding it at 477. Is it a good time to average or shall I exit? Stock is at 451. She's making a bit of a loss here, and the stock has really not been able to, gather so much fizz, so to say. Although the returns over the last 5 days are positive, but no convincing move, so to say. What should she do?
So that's true. Means we have this habit of seeing Varun Beverages around the record highs. So after this, decline beginning this year, the stock has been struggling for any sustained rebound. And as you rightly mentioned that we are still struggling closer to the 52 weeks low. Possibly a rebound is likely considering the stock is trying to claim its short-term averages. So her buying price may be close to around 470, something that stock might test in the near future. So yes, she can continue to stay put with 440 as a stop loss, and around 470 she should review her position.
All right, that's the view on Varun Beverages. Hope that answers your query. But with that, we've come to the end of the query segment. Before I let you go, Ajit, I want to get in your thoughts on gold and silver as to where they are headed, because we've seen a phenomenal run. In fact, gold continues to hit record highs on a daily basis. Do you see more upside, or do you think now it's time for some reversal to kick in? And secondly, I want to also know what your Mahura trading picks would be.
Right. So Ananta, we have released 5 stocks to invest in for this somewhat Reliance Industries, SDFC Life, Power Finance Corporation, Mahindra and Mahindra Financial Services, and Nuvoco Vista, with the average return of roughly around 15 to 16%. So one can definitely look to invest in these quality names for the 1 year kind of investment perspective. Gold and silver, obviously, because if you see last 10 years of his history, only 1 year Nanta we had negative return, that is in 2021. The rest of the time, gold has posted strong returns, and this year it is 65% so far that we have already seen gold. So it's a phenomenal run in the bullion, including silver. And we believe that there could be some consolidation, some profit taking. So don't get carried away with the kind of returns, because we receive query every day in, day out that should we invest heavily into gold and silver now. So the proper approach is now to invest through staggered positions, through SIP route in the ETFs, in case if we are planning to diversify. So gold is still a hedge, means yes, we have seen phenomenal returns, but usually this in the long term, there's returns average out, we don't expect this kind of return to continue for the coming year as well. But yeah, the tone looks positive in case if we get any dip, as we have mentioned in our report, closer to around 1,14,000, 1,19,000. That's the zone basically where one can look for fresh long positions with 1,35,000, 1,42,000 as a positional targets.
All right, that's about gold. Yes, phenomenal run. In fact, it has outshone equities by leaps and bounds as well. Don't get carried away, of course. That's the advice coming in. It's very, very easy to get carried away. Super cycle, so to say, when it comes to both silver and gold. But it's very, very important not to really get carried away. With that, Ajit, would like to thank you for taking out time and joining in, sharing your thoughts, helping our viewers navigate their stock-related queries. It's always a pleasure. I wish you and your entire team and your family a very, very happy Diwali. Very prosperous and bright Samvat 2082 as well. And I look forward to interacting again next week after Diwali as well.
Certainly, Nenta. Thank you. Thanks a lot, and wish you the same to you and to your team.
Thanks a lot. Well, with that, looking at the market, we are past that 25,400 mark. In fact, we are very close to the 25,450 level as well. Over 100-point up move on the Nifty. The Sensex up over 230 points. The mid-cap index, that was looking a little iffy at the start of trade, has also managed to pick up some traction. The Nifty mid-cap index is also up 0.5%. The Bank Nifty up somewhere around 0.6%, and the advanced decline ratio very, very strong at almost 4:1. So yes, looks like the bulls are in festive spirit, and it's clearly showing on the screen as well. But as we head into Samvat 2082, it's time for us to get you the Samvat 2082 picks as well from our experts. Time now for our special segment, Dhamakedar Diwali stocks. Well, as we ring in the new Samvat with Diwali, investors are looking to reset their portfolios after what's been a challenging year for equities. From sector rotation to gold allocation, experts tell us where to put your money for steady wealth creation in a changing global landscape. Over the last year, Indian markets have lagged global peers. The Nifty remained flat compared to 14% rise in the S&P 500, hit by factors like US tariffs, foreign outflows, weak earnings and stretched valuation. But India's resilient growth momentum and several policy tailwinds, including rate cuts, better liquidity, higher government capex, and the recent GST 2.0 reforms position the economy at a key inflection point. Experts also say double-digit FY27 earnings could power strong market returns, especially in the mid and small cap segment. But markets will, of course, be keeping an eye out for the earnings growth trajectory and the US trade negotiations very, very closely. So what's the outlook looking like? Can we expect some fireworks in the year ahead? And which are the top 3 investment ideas to bet on this Samvat? Joining me now to decode what Samvat 2082 could hold and share his top stock picks for the festive season is Devarsh Vakil, Head of Prime Research at HDFC Securities. Devarsh, lovely chatting with you. First of all, wishing you and your entire team a very, very happy Diwali.
Happy Diwali to you, to your family and all our viewers. Nutan Varsh Abhinandan. I wish that the struggles which we had last year will be behind us, and we are looking at a prosperous new year ahead for the country as a whole and for investor portfolios.
Absolutely. We are all looking forward to a better Samvat 2082 because we know Samvat 2081 hasn't really given, blockbuster returns when it comes to the markets. But going forward, first of all, how are you looking at Samvat 2082? We have had quite a few domestic tailwinds, as I mentioned at the start, GST, rate cuts, growth has been strong, inflation under control, good monsoons. Earnings also, most of the experts believe have bottomed out and we could see good recovery in the coming year. What are your thoughts? Do you expect more fireworks in Samvat 2082? And as a house, HDFC Securities, do you have any Nifty target in mind by next Diwali?
Right. So let's first talk about the challenges. See, the US-China trade war, that has actually entered a phase of sharp escalation, and a little bit of uncertainty has increased there. So that is the challenge at the beginning of this new summer. We expect that there could be a lot of friendshoring, a lot of people, all these two countries will try to diversify their supply chain, and that will also create disruptions in the global trade. So that is the near-term challenge. I think as the year passes out, that will resolve itself. The reasons which we had challenging Samvat 2020-81 was because of a lot of geopolitical concerns, the FI selling aggressively in Indian markets because of the relative overvaluations. And I think those challenges are getting resolved there. We saw some peace coming back to the Gaza-Israel issue. We are now seeing lesser FI selling, and we are expecting that the RBI putting a floor on the rupee, that could be some more buying from FIs going forward. So it makes us chirpy about the next year. And as you pointed out, the income tax cut, GST cut, the RBI providing liquidity, and the interest rate cut coupled with the good monsoon. So that makes us bullish on the next summer. We feel that the stock specific opportunities are there where we will see good earnings growth, and obviously prices are slave to earnings. So as the earnings move up, we expect the prices to move higher. We haven't issued the new Nifty target. We usually do it at the end of the year, but we are looking at
Okay.
26,400 as a target for the full calendar year next year.
All right, got your point. But before we break down individual stock recommendations or picks or Dhamakedar stocks from HDFC Securities, what according to you would be the overarching theme in summer 2082? Of course, there has been a lot of interest and renewed buying interest when it comes to consumption. How, according to you, should one look at portfolios? What should be the divide when it comes to consumption and capex? And any other up and coming themes that should definitely be a part of your portfolio in the new year?
Right. So we have a predilection towards the financials and the domestic consumption sectors. So that's where we have tried to pick more stocks. But we also feel that as the capacity utilization are nearing 75-80%, there will be private capex starting. So especially on the engineering and the power side, we also like a couple of stocks. So what we have tried to do is try to pick as a part of this month picks around 10 stocks, couple of them from the financial sectors, and another 3-4 stocks are from the consumption side. As we discussed, that we expect the domestic consumption theme to play out this summer, and apart from that, couple of stocks from the power and capex area. So we try to bring
Got
out
your
a
point.
balanced portfolio in this summer.
Sure. Okay, let's break it down to individual names then. I'm just going through your list. I think I would like you only to reveal your first stock recommendations and why it really stands out as a pick this Diwali.
Right. So as the our show's name is Dhamakedar, so what we have issued 10 stocks, but let's discuss three which are likely to be high beta Dhamakedar stocks. So the smaller stocks where there are some inflection points, let's discuss them. So one of them is the MSTC. MSTC, as we know, is the Government of India, central government e-auction and an e-platform company. So it's a IT company, high tech company, but obviously from the PSU stable. They have various e-auction and e-commerce platform where they do a lot of business for coal auction, new digital products for like Upkaran portal, where government is trying to bring out equipment leasing into country. These businesses are run by this company. So the EPR policy implementation, the vehicle scrapping business is also one of their joint venture with Mahindra, where we see there is going to be a lot of capex. They are doing disciplined capex, trying to build some data center expansion business. So all this makes us bullish about this company, that there are growth prospects here. And compared to the valuation in other technology-oriented stocks, these stocks, MSTC is available at quite attractively, and that's why we have chosen MSTC as one of the picks this year.
Sure. Okay, it has valuation comfort as well. But of course, it has an asset light model and, as you mentioned, steady earnings visibility. How do you see margins and growth sustaining over the next couple of years for MSTC?
So we do expect it to deliver good growth. Our earnings expectations are from 27 rupees in FY27. We expect it to go to about 40 rupees. So about 14%, 12%, and 20% growth in revenue, EBITDA, and PAT over the next 2 years. Around that is our expectation. So compared to such a steady growth of 20%, it is available only at 13 times forward earnings. So compared to the growth, it is available at a very good valuation. So growth at a reasonable price is the theme where we have picked MSTC as one of the stocks.
All right. Okay. About your second recommendation then, take us through which stock it is and what's the rationale?
Sure. So second stock is in the alphabetical order. So we discussed M on MSTC. So let's discuss Northern Arc, which is diversified retail credit platform. So they basically is an NBFC, but also do fund management and placement and lending for other NBFCs. And they, compared to other parts of the world, we still have a long way to go for the lending business to grow. So that's why we have chosen NBFC. It is basically a multi-channel offering for the NBFCs in the lending space, in the private placement fund management space, and they have a lot of proprietary technologies. So using this technology, they have been able to grow their business quite rapidly. They have a very conservative credit policy, so they write off any assets which are NPA for 90 days, and that's why their gross NPA and net NPA figures are very low. And management has highlighted that because of the macro headwinds and RBI's rate cut and the liquidity, they are expecting a very good growth in the second half of the FY26. So that's why we have chosen it. It is available at around 1.2 times adjusted book value next year, and which is quite attractive. And that's why we have recommended this stock.
Sure. Of course, with RBI rate cuts and a good monsoon expected to support lending in the second half, as you mentioned, what's the upside you see in terms of profitability and fee income for Northern Arc?
Right. So Northern Arc, as I mentioned, they are doing about 300 crore kind of PAT this year. And we expect, our analysts expect that the profits are going to rise to 580 crore by FY27. The top line, the net interest income, which is around hovering around 1350 crore, should likely to go to about 1800 crore in next 2 years. So robust growth is expected with a very attractive valuation. If I value the company at 2 years down FY27, it is easily available at a very attractive one-time price to book value. So that gives us confidence that this stock is likely to give us a good opportunity. It is trading around 270-80 band. Our target for the next summer is 333 till next Diwali.
Okay, that's the view, the target of 333 for next Diwali. Let's talk about the other recommendation as well. I believe it's a stock called Sheela Foam. Tell us what is the kind of upside you expect here, and what makes you select this particular stock as your Diwali recommendation, or a Dhamakedar stock, so to say.
Right. So Sheela Foam is the largest PU foam player into India. They have two famous brands. Sleepwell is their brand, which is the anchor in the core geography. 2021, they bought a brand called Kurlon, which is a very famous brand across India, and now expanding into northern and western India. And they have recently launched Tarang under the Sleepwell category, and Kurlon, they have issued a new brand called Aram, which is sub 10,000 category to capture to the growth which is happening into tier 2 and tier 3 towns across India. So it is basically a play on the consumption, as we see that these brands are going to help them outpace the industry growth, improve the margins, and the business mixes towards the higher margin businesses. See, the change in the lifestyle and the urbanization and the consumption play and the rising India's per capita income is changing the preferences towards these mattresses, and that's where this company, which was struggling for last couple of years post Kurlon acquisition, is likely to turn around. And as a Dhamakedar stock where company moves from loss to profits, we think that this has a potential to give us the alpha to our portfolio, and that's why we have chosen this company. We are expecting it that the lower margin will eventually mean revert to the normal margins. That's where we are expecting good growth.
All right, that's the rationale for choosing a Sheela Foam. So you've given us 3 Dhamakedar picks for Sambat 2082. If I may take this opportunity to ask you, if you were to categorize all 3 stocks, all these 3 Dhamakedar stocks as a firecracker, what comes to your mind for all 3 of them, if I may ask?
So what we have done is we have chosen the 10 stocks where some are large cap steady stocks like Pidilite or LT, but the one which we have discussed, these 3 are likely to be high beta, high risk, high reward kind of stocks. So these are, I would like to characterize them as rockets. So if they fire, they will give us very good return and give a lot of alpha to our.
Ready to take off, rocket. That's what you mean. Okay. Got it, got it. Good to chat with you, Devarsh. Always, pleasure. Of course, we will be chatting more often. All the earnings that keep trickling in, we'll touch base with you for that. But would like to thank you for taking out time this morning and sharing your top 3 Dhamakedar recommendations with us. Wishing you a very, very happy Diwali, a very happy festive season, and a very profitable Samvat 22 going forward.
Thank you for having me on the show, and I wish all the viewers and you the same. Have a prosperous new year. Thank you.
Thanks a lot. Well, with that, of course, let's shift focus to what the markets are doing. It's a solid triple-digit up move on the Nifty. 25,438 is where we are at. Mid cap index is also, moving in tandem, up almost 0.5%. Just want to see what's the swing high that the Nifty made in today's session. We are, of course, near about the day's high, 25,441. That's the swing high that we made today. And if we clear the 25,450 mark, and if we close above that, who knows, we could be heading into the moderate session with 25,500 firmly in the bag. But nothing to complain, but big ticket earnings to watch out for. So, watch out for Infosys, Wipro, LTI Mindtree, from the consumption basket as well, Nestlé, Eternal. So, yes, it's a busy day. Even Jio Financial reporting numbers today, and of course tomorrow, Big Boy Reliance Industries, 17th October, that's when it reports its numbers. So, yes, rest of the week, very heavy in terms of earnings. We are in the thick of the earnings season. So, of course, Money Control will be bringing you the latest on all the earnings that are trickling in, analysis, brokerage calls, etc. So keep watching this space, and of course keep logging on to moneycontrol.com for all the latest on earnings and the markets. But with that, we are completely timed out on this edition of Opening Bell. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates, and I'll see you soon. Thank you for watching.